Good morning, everybody. Welcome to the Flow Show, Tuesday, the 4th of November. And quite a bit going on in markets today. Got a few pairs on the move, a few currencies on the move as well. So lots to talk about this morning. Good morning, Kay.
Morning, Ryan. Morning, everybody. Yeah, it's moving. Finally, should we say, or just the beginning of?
Yeah, well, let's see. Hopefully, it's the beginning of the pickup in volatility because it's hasn't been looking good recently. But yep, we can always remain hopeful. Right, lots to talk about today, so let's get stuck in. First things first, we've got over in North Korea, apparently, according to South Korean press, we've got little fat boy, our mate little fat boy, Kim Jong-un, is apparently willing to meet Trump. They met in Trump's first term, and it's possible they're going to meet again. So Trump's still going for that Nobel Peace Prize. On the other side, though, hot off the heels of Xi's meeting with Trump, Xi came out to reaffirm their strategic partnerships with Russia and all things like trade, commodities, and security. So just making everyone aware that while he might be talking nicely to Trump, him and Putin are still best mates for now. So that's a little bit of politics going on there. Over in Japan, we had the final manufacturing number for October, coming in a little bit softer at 48.2, so still in the negative there. We're getting more of an idea of the lay of the land regarding all the new Japanese politicians coming in, including the PM and finance minister. Takaichi, with a bit more guarded comments, I would say, in her comments overnight. She says she aims to boost tax revenue without hiking tax rates. She will present her growth strategy next summer. She's got her ministers already on the ball with that, compiling packages and whatnot. She's going to aim for growth via services and infrastructure. Also expects the BOJ to conduct policy aimed at stable, sustainable price targets. Then a little bit of a nod against the BOJ, saying that Japan is still halfway to achieving its price target with wage gains. A long way to go there. Now, this was a bit more guarded. She said the government will strategically deploy fiscal spending to boost household income, consumer sentiment, and generate a positive cycle that strengthens the economy. Again, it's more pop gun than bazooka type sentiment from her. And she also had a little bit of a dig. Her predecessor, Abe, saying Abenomics had limited success on a growth strategy. So a little bit, the market was expecting her to be a massive fiscal dove. She's yet to fulfill that role just yet, and a bit of a punt, shall we say, on any big fiscal measures until the summer. So the market taking that in its stride as well. We're also getting the lay of the land from Finance Minister Katayama. It seems she is in higher settings, shall we say, in terms of what's happening with the yen. She says she's closely watching FX moves with a high sense of urgency and is recently seeing one-sided rapid moves. I'd mark that down as sort of DEFCON 3, whereas some of the other finance ministers take a bit longer to go up the warning scale. She seems to jump straight in near the top end of that. So we're probably just waiting on the heavy speculation coming into the market, and then we might be one step from intervention, Kay.
Oh yeah, it's actually a repeat of what she said right after the Bank of Japan. But yeah, even with the yen, let's say stabilizing, she still finds it a bit one-sided. So that's the thing. I just wrote up something in the room as well because yeah, we could be forgiven for thinking after Takaichi met with Trump, Katayama met with Besant, and now we have those comments about Abenomics didn't produce enough. That Katayama said that they need to tackle inflation first. Market is yeah, people could be forgiven now in trying to think that those the two ladies together are going to make one Thatcher and organize and try to organize something in the end to strengthen the yen. Obviously, it will have the US's blessing, and with that growth strategy to be compiled for the next summer, indicating that she may not be in a hurry to spend. But again, I think we still it's a bit of a double-edged sword. And yes, I mean people and especially retail traders, I would say, have always tried to counter everything that's happening in the market, and yen has been one of those currencies that the market has relentlessly tried to counter when it weakens, thinking that the next 6 months are going to be the yen months. But I still think we need to take it with the necessary caution because yes, Katayama said something about that fighting inflation, which could be interpreted as saying, okay, Bank of Japan, you can go. And as we've already been saying, and I've already been saying, I mean, I think really December is live for the Bank of Japan. But on the other hand, they already said as well that they are going to put measures in place, and that was right after Takaichi's election, measures in place to fight inflation and to boost households' income, right? And Takeichi said something pretty similar about boosting households' income. Putting growth strategies in place doesn't mean that they cannot compile any extra budget in the meantime. So, for everything that they're giving us and potentially make us think that the yen could strengthen, there is another consideration to have on the other side of the same coin. But I'm less outright bearish yen right now because of those comments, because we need a bit more clarity, because Katayama continues to warn the markets that she's probably going not to spend the whole book on intervention lines before actually stepping up. That's probably going to keep the market on its toes. So I'm getting a bit more neutral right now until I see a bit more clarity, because I also think that now the market again is jumping on this fact. Oh, see what Katayama and Takaichi said, but in the meantime we have seen a pretty big drop in the equity markets, bringing risk a bit lower. Pretty big, or big, I mean, setbacks in global yields, which are usually reducing the interest rate differentials with Japan. So all of that has pushed the yen a bit higher in combination with those comments. I still want to see what's coming out of the hat, or the budget that they will put forward, and yeah, supplementary budgets are never to be ruled out packages.
Yeah, exactly. I mean, we've had the rub of this dollar yen particular through all of October. I mean, we said a couple of weeks ago expect to see some yen weakness. We got it. My timing is shot to crap so far this week. It's only Tuesday. My play of the day on the trade-off yesterday, which recorded yesterday, was to short dollar yen up towards those prior highs, 154. So I come in this morning, it's already been rumbled. I was going to look to short up to that 155, so that might be done and dusted now. But it doesn't matter. I'd rather have it the right way than have it the wrong way and being in a trade. But yeah, I'm in the same camp. I don't think we're potentially done with yen weakness. The market isn't going to buy yen hand over fist just because what might happen in the summer, or even sell yen hand over fist by what might happen in the summer. It's too far away. But yeah, I think we might go into a bit more of a neutral setting again until the next headline drops. I'm going to keep an eye on that as well. But yeah, the market, we knew before the election, the market saw Takaichi as a big fiscal dove, and she's not lived up to those expectations just yet. So that's at least stopped the yen from weakening too far. And as for Katayama, yeah, seems a bit scared of her own shadow if she's commenting when the yen's just broken a couple of pips higher than the prior highs. But yeah, we'll have to keep an eye on her as well. Right, anyway, moving on. Yeah,
I think Besant has a lot of influence on Katayama.
yeah, they seem to be keeping best of buddies. That's another thing Takaichi said, that they're going to have further meetings, plenty of meetings with Trump and co. So they're going to be in close contact with that, make sure they stay on the right side of that. So yeah. Right, moving on. The RBA came out unchanged, and with a line that, from Bullock, that they didn't even discuss cuts. That's how undovish that meeting was. They raised their inflation forecasts quite high. They see their rate 3.6% going into the end of the year. Says the policy decision was unanimous. Bullock saying that they may need less easing this cycle than in past rounds. There wasn't much of a confirmation pop in Aussie dollar. I think it went up 20, 25 pips or something when the RBA initially dropped. Where was it in there?
Not even.
Not even. Oh, sorry. Where am I?
Yeah, no, I think you're looking at that price spike also. It was just
Yeah, it might have been.
it was just the spread going extremely wide. I think over the announcement. Yeah.
Yeah, it was probably right. Yeah, there we
So,
go. So small rift anyway, and then it was downhill from there. I mean, we were pretty much expecting it, Kay. Maybe the Aussie was just hanging around, get over the RBA hump before catching up with the rest of the dollar pairs
yeah,
going
exactly.
on. And here we are, just having a little nibble under the figure at the moment, 64.80 down here. So this is now probably going to be the test for the Aussie. Can it look as supported as it has been? Now we're over that hump.
Yeah, I mean exactly, Ryan. We said it yesterday, right? The confirmation, and then see, just look at what the Aussie does afterwards. The dollar is stronger, yeah, stronger. And yeah, they're both the antipodians, and antipodians are always a risk currencies as well. You look at the metals are coming off, the equity markets are coming off, the commodities are in the red as well, and all of that is weighing, and so yeah, the Aussie just caught up with the rest of the markets. I'm still more worried about the Kiwi than the Aussie, to be honest, but yeah, it's right here and now. I'm not extremely tempted to do much, but we have two decent levels below there, right? If we continue to slip and slide, you got that 64.75.80, and then that infamous 64.40 from where it bounced pretty nicely all every time. So those are two, for traders. Those are two pretty decent levels, depending on which side of the market you want to be at. Those are two really good levels to watch, and then your blue zone there starting around 30 or so, and then up to 45.50, and then that's your topside zone. Get outside of those levels, and probably the Aussie is going to add another percent or so to the moves. It's nice to have those levels. Even if we don't want to do anything specifically at the figure, we know that the next 20, 30, 40 points either side are going to provide with some clues.
Yep, and then we use the fibs to gauge what the trend's doing overall. So yeah, plenty of big levels going on. Addy, we spoke about this yesterday. There's a lot of dollar strength. Well, firstly, everyone knew the RBA was going to stay on hold. It wasn't a shock. And we were saying yesterday that the price could have been holding up just for the market to get over the hump. I mean, when we did the flow show yesterday, we were up around where were we? For Monday. So when we were doing the flow show, we were just messing around this zone, and then we had a little break in the afternoon. So the market was looking a bit resilient, but it knew it wasn't going to get a rate cut. And if it wasn't going to get a rate cut, the chances are that they'd stay on hold for a while. Wasn't going to be a shock either. We knew the US dollar was strong, as we saw what was happening in cable, the euro, everything else. So you have a pair that is not conforming to what's happening in the broader US dollar. And then the RBA confirms that they're not doing anything. and then the market can carry on. And as Kay says, then we've got stocks coming down. So you've got the risk element there, you've got gold coming down, you've got the commodity element there. So the RBA move was nothing. Okay, no one should have been expecting the Aussie to ramp up 200 pips just because they stayed on hold. We were looking for maybe 20, 30 pip confirmation at most, and then that would reverse. So it's gone exactly as we thought it would go, and that's why you have to understand what a market is thinking going in. It's not just a mechanical, the RBA didn't cut, so Aussie must go up. What was the market doing going in? And I think we covered that pretty well yesterday. Right, moving on over to the S&P. And Shudin, if I'll get the name right, says our monetary policy is aimed at ensuring price stability. Our interest rates are where they should be, but we are keeping our interest rates low so that inflation remains in the range of price stability. We will only use negative interest rates when necessary. We've got a very strange thing happening today. Rachel Reeves, the Chancellor, decided she wanted to front run the budget with a press conference, which turned out to be a load of old waffle bollocks. A lot of people were expecting her to confirm what she was going to do in the budget. She all but did without saying it. Some of the key lines saying that everyone will have to do their bit in the future, i.e. they're going to spank us with tax rises and whatnot. So a bit of a strange one, because she didn't mention any policies really. So one wonders why come out and talk and say it. She's preparing obviously everyone for the worst, getting out in front, it seems. The pound is looking softer, obviously. But there's a bit of divergence going on. I was keeping an eye on bond yields to see what they made of it, and they were okay. We saw bond yields coming down a bit, which if the bond market was worried about the fiscal picture, and we could have seen those rallying, which would have probably added to the pound coming off more. So bond market stayed relatively stable. I have a quick look, show you a quick look. I've got them here. We'll go into 10-year gilts. So we're pretty much back in the range. Yields were coming down a little bit there. There is a bit of a story doing around from a think tank, for what they're worth, saying that her black hole may not be as big as expected, but we'll wait for confirmation of that. But overall, the pound getting a little bit of a kiboshing through her comments. So we're still expecting bad news. Kay, I think it's going to be a measure of what the pound does now, particularly euro sterling, as to whether we can get back to these highs, or is this up here sort of peak pricing ahead of the budget?
Yeah, I don't know either why she came out today, but I think her denial to answer any questions surrounding taxes is pretty clear that there will be taxes. If you don't deny it, it's probably going to be there. We have to take into account that we have Bank of England coming up. Or was it the aim of her intervention? Was it aimed at pushing Bank of England over the edge to cut rates before she slaps on taxes, so she can borrow, or to fill her gap, she can borrow a bit cheaper? That's maybe the conspiracy theory.
That did cross my mind briefly,
Yeah,
I have to
yeah.
admit, but that's going a bit too far coming out of the press.
It's actually putting too much intelligence in her
Yeah,
intervention.
exactly.
Yeah, but really, I think the market they don't like anything of what's going on right now, and we have seen an ideal hold of that euro sterling yesterday, or even overnight. We came close, and I'm a little bit annoyed with myself. Yesterday I had a bid in at 87.55, and why not put it on the top end of the support zone? Yeah, I still think the sterling is something is a currency that's not going to find too many friends, especially if that Bank of England will be taken over the edge, we can see like an extra move lower in the pound. But the thing we spoke about yesterday is still also very much in my mind, is that are we not selling sterling, and then at the day of the budget, the whole thing flips around. And I'm going to be really I think I'm going to be flat going into the budget, but for now I want to keep my euro sterling, the base euro sterling long, because I think Bank of England could come up with a dovish surprise on Thursday, and then we are going to trade above that 88 17 19 there. So 78.6 of that move post after move after Truss and Kwarteng. That's right there at 88 17. If you stick a fib on that one, the 78.6 of that move is right there at 88. No, not that one. The
from
next
there.
one, because the
Yeah.
other the former one we don't we don't even know where the high is.
No, exactly. Yeah.
No, you take the second one, which is a more natural move, because we had a large move up, and then from there we started the big move down. Stick a fib on there, 78.6 comes in right where we topped out twice now in the euro sterling. That's really my level that I'm looking at. If that breaks, I think it's 89. And then I'm more than happy to let it go and wait for the budget.
Yeah.
Uh, yeah, because
Yeah.
it's going to be an RBA type of thing at the budget. Everything has been will probably been thrown out there. The market will have a really good idea about what she's going to come up with. And do we really want to be short sterling into the budget? I don't know. But for me, it's going to be a case of, I guess, being flat. But that's front running the events. But in the meantime, that's how I'm trading it.
Yeah, no, exactly. Been saying it for a couple of weeks now. It could be a sell rumor by fact. If it isn't as bad, I'll probably trim down my position. I won't throw it all in unless something changes between now and then. I'll probably keep a little bit over. But yeah, once we're over that budget, I'll see what the reaction's like, and then I'll either cut out myself and see what happens. I don't think I'll turn short straight away,
No, me
because
neither.
if the news is bad, even if it's not as bad as expected, but still bad, that's still going to mean potential pressures on the economy moving forward.
Mm.
So
Yeah,
then
and
we
I
could
think that's
out
where
trade for the next 6 months or so.
Yeah, and I think that's where your stability in yields come from. The market is a bit undecided now whether it's going to weigh on growth, in which case yields are going to come down, or cost her an arm and or you and me an arm and a leg, and yields are going to pull higher because they have to fund a heap. So I think it's a bit the market is in between those two chairs now on in the gilt market. I'm not going to read too much in the immediate moves of the gilt market right now.
Yeah, that's cool. I'm just going to. Mike said a comment about euro dollar. I'm just going to jump on there because we are down testing the figure again. I've been looking at this, waiting for this level for a while. I missed by a point one of a pip yesterday on a long, and then I didn't. I took my orders out because I thought if we're coming back down here again, I'm not going to be so keen. So we did have a reasonable bounce. We had a little test again today. We've had a bounce. We're having another test now. Mike, you're asking, can we hold it? I don't know. This price action is looking very weak. You know, the bounces are very limited. We keep coming back to this 115. We've had a 2 pip break underneath it. I was happy to buy it yesterday. I'm not so keen to buy it today. It's a level, it's a level. It's one of my big ones. But yeah, I'm not so keen right now. I wouldn't be surprised if we saw a little bit of a flush through if we go now. So that's my thought. And have you got any thoughts on this level, Kay?
Well, I bought it yesterday, and then I'm already out. I don't know what's going to happen to the dollar, to be honest. Are we going to push through? The thing is, though, the euro is still not the worst currency to against the dollar. Right? If you look at stuff like the Kiwi, much worse. If you look like cable, much worse. I it's choose your pair wisely. I really don't know whether it's going to hold below, break below, or just do another fakie as we have seen. I wouldn't be surprised the US walks in and just because they love to do it. We're going for a run down under 115, taking it maybe even to one closer to 114 and a half. But I'm if I want to buy dollars, it's not going to be versus the euro right now.
Yeah, and Joe, if I'm going to do it, I'm not going to do Dixie either, mate. The Dixie follows; it doesn't lead. Euro leads the Dixie, and everything else leads the Dixie. So yeah, sorry, mate, not going to look at that today. Right, moving on. Over in Germany, Germany's ZF, which I can't remember the long name. They shortened it to ZF, but they are in the tech industry. They plan to furlough a load of workers due to a shortage of chips, according to the union over there. Just for some context, they employ around 160,000 people globally, with around 55,000 in Germany. So they're not looking too good over there. ECB's Ren sees inflation risks as two-sided, says uncertainty has eased, but it remains considerable. He has confirmed he's going to run for the ECB vice presidency to replace de Guindos. Now that's a bit of news because there were expectations that he might put his hat in the ring for the top job, i.e. Lagarde's job. But it seems he's happy going in at VP. Let's see if he gets it and if he manages to speak more than de Guindos has. Right, coming over to a bit of data from yesterday. Where are we going? Up here. Canada manufacturing PMI came in at 49.6, so quite a decent improvement, but it's still staying below the expansion line. The final S&P Global US number improved to 52.5 from 52.2 flash, and better than the 52.0 in September. The ISM that came in a little bit mixed. We saw a softer number on the headline, 48.7. Prices came down to 58. We're expected to go up to 62.4, so a bit of price easing. But employment went up 7 small pips to 46, but still in negative territory. All those numbers still in contraction, but a bit of price pressure easing for the Fed anyway. Fed's Mirren was out and about again, said we could get to neutral in a series of 50 basis point cuts, but the Fed does not need 75 pip cuts. Well, thanks for that clarification. He says the economy is not dysfunctional, despite him keep voting for 50s. He says he will not commit to another descent in December, says things could change. Fed's Goolsbeast says he's undecided for the next Fed meeting, says there's a higher threshold for rate cuts versus the last 2 Fed meetings. He feels uneasy with front-loading more cuts. Says he has been more worried about inflation rather than the jobs market risks, says rates will likely drop well below current levels. He's cautious about the layoffs data, of which we get that this week. Says that consumer spending is a key driver of economic momentum. And we know that it's only the top 20% that are keeping that going. So if retail sales go, we could be in for some fun and games. Fed's Daily says she supported the rate cut. It was appropriate. We need to keep policy modestly restrictive. She has an open mind on the December meeting. Says 50 basis points of cuts this year makes the Fed better positioned. Says there's more vulnerability now in the spending data given the softening of the labour market. So another one worried about consumer spending. Fed's Cook, I think her first appearance since a bust up with Trump, says every central bank meeting is live for monetary policy. A recent Fed interest rate cut was appropriate given the risks to the jobs market. It says the Fed's mandates are in tension right now, and they're attentive to risks on both sides. Stiffers over at the BOC says monetary policy is providing some stimulus, and they're prepared to adjust if the situation changes. Besant says that SNAP payments could be made this week. There's some sort of vote going on over there, Kay, that, if I read it right, could swing the balance in getting the shutdown fixed. I don't know if it's like local elections or whatever's going on over there. But I've seen a few pieces saying that maybe that could change things. Maybe some of our Yanks can let us know what's going on over there.
Yeah, maybe it's better if they give us a clearer idea, because for me there's a lot of people talking, and the one is saying that it's possible, the other one is saying no, we're going to the wire. Trump remains completely mum. Besson says that there might be money, but then the market says there is no money. I mean, to pay that SNAP, I'm starting to get a bit lost in all those comments, and especially not seeing any comments that are really giving a clear indication of what is next. Because every positive comment is followed by another day of the shutdown going on. But yeah, you're right. I mean, there are voices popping up saying that some people may be ready, but then you've got those two big lines between the Republicans and the Democrats, and are the Democrats going to give in something? It's not yet a done thing to me.
Yeah, because there's only like 6 or 7 votes, the difference between them. In whatever this, I think it's the Senate where they need to pass ending the shutdown. So it's not a wide margin if something happens in these elections, but yeah, we shall see. Right, what do we get? Yeah.
Talking about elections, we have a new mayor in New York being elected today over in the US.
Oh, was that today? Is it?
I think so. Mamdani guy is front running. Is a front runner there. I don't know if it's going to impact markets also, but we do have a mayoral election in the US today.
Yeah, I'm not sure if it's going to impact anything. We'll wait and see. I know all the Polymarket crew were getting up in arms about it last week. I had a little bum fight on Twitter over that. Everyone going, "Oh, Polymarkets are predicting." No, they don't fucking predict anything. But I'll save you from that rant anyway. Right, just looking, going over what data we are not getting. I thought we were getting JOLTS data, but no, that's BLS, as you can see there. So we're not getting that data. We won't be getting factory orders either, because I quite like this calendar now, because it tells you who's releasing what, because that's Census Bureau. So we're not getting that. We're not getting that. What else have we got coming up? We'll get the IBD Tip Optimism Index, a little one to keep an eye on. We will be getting Redbook. Well, we will be getting Redbook. I better check it. Yes, we'll be getting Redbook, because that's a private number. Redbook is a weekly retail sales number. I used to follow many moons ago. Then it lost any significance, but we're not getting anything else. So everyone will keep an eye on that one. We also get the Atlanta Fed Q4 preliminary GDP now. Their Q3 number went up to 4% after the ISM yesterday, from 3.9%. So their wet seaweed in the shed is still predicting the economy to be ticking along nicely. So apart from that, we're not getting NAFL later on this afternoon. Some Canadian trade data for probably beginning of the year, if you need some data fix there. Right, so it's going to be headlines only pretty much for the rest of the week. We're also not getting the new ADP thing. Mr. Brown confirmed that they're only going to do this thing for the first 3 weeks of the month, and then they'll skip it into when they release their monthly number. So I thought we might be getting their Tuesday ADP thing. We're not, so it's just the ADP tomorrow that we get. Right, and that's that for that. Anything else, Kay?
Yeah, we do have the Canadian. Carney presents the Canadian budget for the first time. It says, and I've been looking it up quickly, Dimi. It says 4 p.m. I guess that's 4 p.m. local time in Canada. So that's going to be Carney presenting the budget. Let's see how the market reacts to it. I have no idea what really is going to be going on, but we know that Canada is a bit on the struggling side right now. But you never know. It could, and it should. A budget is always relatively important for a country. It should create a wobble or two, I guess, in the Canadian dollar when he will be presenting it. But it's quite very late in our day. I may just have a distant eye on it, but I will more be a follower of headlines than really anticipating much on it.
Yeah, I'll probably give that a big fat pass. What do you say? 4 o'clock local times. That's what, 9 o'clock ours.
Yeah, something like that. That's what it says here.
Yeah, I might be doing the options around then. So it make a change. A country actually being able to pass a budget, given what's happening in Europe recently. But yeah, we'll see. We shall see. Right. So we know what's coming up later. Right. Where shall we go? Where shall we go? We already had a look at the euro dollar, dollar yen. That's been interesting because we did get down to the break point. We've had a couple of little looks at this break point where we had these highs previously, quite significant highs. They held for quite a bit. So we've had the break. It's always important to see how we get on the test down there. We're just coming close to it and holding. So there's a bit of protection ahead of it. If we do put in a solid hold here, then there's a good chance that we'll at least go back up towards 154. But just keep an eye on this 85, 90 area. It's just where we had that price action in there, where it was support. Let's see if it holds. If we do get a rebound up there, that might tell us whether we're going to be heading back down, because that'll be a pretty tight range to play in between 80s and 25, 30s. But if we get back above there, then maybe we're going to push on to new highs, or at least go and challenge the old highs. So there's 3 levels really close by intraday to keep an eye on, up towards these highs again, this middle 80s area, and then this break point down here for that one. Ali, yes, I'm still in the Euro Swiss. We've got back into the zone. I want to see it start holding the bottom of this zone. Well, I prefer it if it just shot straight up, but in the likelihood of that not happening, I want to see if we get a bit of support back in this zone. This is just apart from these odd moves that we've had, this has just been a wide consolidation period that we've had going on for as part of over a year now. So just want to see if we're back in this zone. I don't know where it goes from here. We could slowly keep grinding up. I'm not expecting this to rally up to 96 or 95s or anything like that. We could just go and mooch around the zone a bit. So I'm just going to sit in this one and stay there as long as possible while doing my slicing and dicing, and see where it goes to here. One pair that might be on the break finally, and that's dollar mex. It had a little breakout on Friday, came back into the zone on Monday, but we only came down to that 45 level, which is just a little bit of a sort of on-off level in there. Pretty significant bounce on this back out the zone. So we're obviously breaking the upside far more regularly than we're even going to test the downside. So it just tells you that you've got a bit of an uptrend, very shallow uptrend going on here. So the fact we've now made new highs above here, and we're testing up near this high, just shows you that this break might be the one that's a bit of a runner. I think if you get a dip that confirms at 1850, that'll be a signal. I might have a little nibble long if I see that price action, because it might mean we're busting out. But we're miles from doing anything major in this one. We've still got this whole trend to deal with yet, and the 38.2 of that isn't up until 1938. So there's plenty of levels in the way. This certainly doesn't mean the whole trend is changing around just from this breakout, but we've been sat pretty tight for a long time, so it's natural for a price maybe wanting to stretch its legs. Any news behind this one, Kate?
No, I haven't seen anything. Just the stock equity markets coming off, and the risk probably. No, I haven't. I must say I haven't seen any headlines on out of Mexico to explain why we actually rallied back up to this level here right now. Maybe I missed something, but yeah,
It's such a weird pair because it's gone through it's gone through feds, it's gone through everything, you know, tariffs and all that crap, and it doesn't move, and then all of a sudden it moves when there's no news, and you think, oh,
yeah,
what?
exactly. Yeah, it's exactly that. Uh, Um, could it be something to do with the Chinese saying "Don't cross the red lines" to Trump about whatever things are maybe not done, so it might not be a smooth one or so. I really don't know because the big it seems like China is now turning really their skirts rather to Holland, over to Holland, the next period thing, right? I no, I haven't. I must say I haven't seen anything regarding Mexico. Maybe we missed something, but I haven't seen anything.
Yeah, no worries. Okay, I'm going to pump it over to you.
Yeah, right. I've been putting up that sterling Aussie, Michael. I know we could do it in the room, but it's always, I guess you're always you're thinking as well that it's easier to look at it visually on a bigger screen. Yeah, you're talking about this potentially forming a bear flag, right? I think the major thing that happened here in the sterling is that finally we started to move lower. That still tells us that sterling is weak and Aussie maybe not as weak as other currencies may be. On the more medium term, I think we've broken about this level here, which was also a horizontal level around 2 or 2.5, and it's looking a bit fragile. But then, and be careful because this is a daily, right? Um, Bear flag, yes, and it could continue to stretch down, but then look at the zone we are about to enter. This is also right here, around those lows that we saw is also 38.2 of this move all the way from early 2023, which is also past truth and quarting move up. We are coming into the 38.2, so I'm going to say yes, this is still bearish, but in the next 2%, if we see this move, I would start to be a bit careful perhaps. It may just come down to here and then start to bounce. Yes, it's still quite a move, okay? Um, but yeah, in the shorter end, I see what you mean about doing a bear flag of so, but it's relatively steep. Do you really think that's worth calling a bear flag this one? Yeah, okay. If you look at it on the hourly, it's a bit clearer, of course. Yeah, if you look at it like this and this, yes, that's the possibility. Whether you put it here or there, so it gets back below 2050. 2020, it's probably ready for another leg lower. Right. Uh, Swiss, Ryan already showed Euro Swiss. The dollar Swiss, we are moving higher. We've broken above this 80-40. We are moving higher up into the 81s, and then I think the next. And then we're coming back to what we were talking about in the euro dollar as well. Break of 115, yes, and then maybe do an extension, yes, and so obviously euro Swiss. If you look at dollar Swiss, if you look at the euro Swiss, being relatively stable around 93, the figure right now is going to be an inverted euro dollar, right? So yeah, we could push through 81 and then have a run up to 81.5-ish. But there I would start to really be a bit cautious if we get that run, okay? On the other hand, if we start to break back below 80.5, 80.40, the party may be over again, okay? So yeah, we could do the extension, but I'm not going to pronounce myself on the next really big move. A bit of a resistance around 81 there, in the middle of that zone we are in at and trying to get above. There's something interesting happening still on gold. We can't get out of this wedge despite other metals. And last time this happened in the metals, a bigger setback that we saw in the metals, actually the start of this move was a move in palladium, where palladium dropped 4 or 5% relatively quickly. And we had a similar kind of move this morning, but then gold didn't really follow through. Gold is really in this wedge, which, and I keep on repeating myself, it seems still that gold has this thing about it, which is still a hedge against everything that can go wrong. Okay, it didn't move higher on the back of lower equities either, but we are still very close to 4K. This is not ready to give it up, you know. I wouldn't be surprised if we continue to do that. The next move will be one that goes up again. Just I don't have the position, but I'm starting to think that if it really can't break below there, this 39.60 or so, where's the next move, you know? And yeah, silver still above 47.5. Tried it again this morning. This 47.5 shaping up as being a bit of the pivot in between that right in the middle of the bigger range, right? So we were playing the ping pong above that 47.5. If we manage to get down, we may be playing a bit of ping pong in the lower half of that fresher range. What else are you guys? What else are you guys up to? The S&P. It's below 6,800. Was a bit of a level of mine here, around that 6,800. So we're below. There is, for me, the potential that we trade a little lower, still around 67.25. Okay, but then once we start to change another big figure, and this is the prior low here, by the time if we get there, 66.5-ish, this blue line will have come up there. And could it just be that we will stop there again? I'm not going to potentially buy, because we've been speaking about that as well. The longer the shutdown goes on, in theory, the worse it should be for markets, right? Because the more uncertainty we create, the more people are missing money, etc., etc. The logic would want that we continue just with the length of the shutdown to continue to filter lower. Are we going to break down? I don't know, but to me, the shutdown, the longer it takes, it can't be really bullish for equity markets, really. So I would say that rallies could probably see a few sellers pop up, and we are going to slip and slide lower. And that's it from me, Ryan. Back over to you, mate.
Thank you very much, mate. Good stuff as always. Time's flown for this show. Quite a busy show, lots to get through. And yeah, hopefully we keep this volatility in for the rest of the day and get some good trading. Have a great day, everybody. We'll catch you all later on Face, those that are there. Otherwise, we'll see you on here tomorrow. Have a great day.